righty, I said we might go live in my last video, but we are live for the Fed meeting. I got my buddy Mark with me from Not Your Father's Capital over on his YouTube channel. So big day today. I don't think it's going to be a big day, Mark, from the standpoint of a big decision. Like, I don't think we're going to have anything blindside us. I mean, crazier things have happened, but I don't think we're going to get a Fed decision that hikes rates or cuts rates. Of course, the expectation is at some point this year we get some cuts from all of the rate hikes that we've seen. But I think it is still a big day from the standpoint of what's the temperature in the room today? And does Jay Powell give us something, that sets us up for these next 3, 4, 5 months? I do think that is still going to be something we're going to watch today. What are your expectations today? What do you think is going to happen as we get closer and closer to the decision?
Yeah, anything's on the table really, because he can get into something where. Let me fix this audio real quick again. Did you mute the echo cancellation on your end?
Let me do that. Hold on, sorry. Take it off or on?
On.
Echo cancellation's on.
There we go. We're back. No, I think it's going to be something where, he could say something completely dovish, and it's just going to hit the market in a weird way. And, we're not expecting anything one side or another. It's just I think everybody's going to tune in, basically get nothing, and okay, no news is good news. Move on with your life. We're waiting the cuts, but I don't think you're going to get that today. I don't think anybody does. And it's just something where nobody wants any reaction today. That's the big stuff coming, but we see the market right now, crypto bubbles are red. And, based on a lot of stuff we've seen in the past, it does historically kind of coincide with just that last little bit of those minutes, where some reporter will ask him something that's completely, fair game. And he just can't just say yes, no, and give one reason why. It always has to be I'm going to talk for 5 minutes, and all you guys, start bubbling and, make irrational decisions and cause the market to go haywire.
Yeah.
So,
yeah,
that's why we watch.
Yeah, for sure. It'll be interesting. One of his favorite things to do is basically say, hey, we're going to let the data dictate what we do next, right? He loves saying that. We're going to let the data dictate everything. We'll see what the data tells us. And we're just going to follow the data. But it'll be interesting to see. Every once in a while, he does kind of give us a peek behind the curtain in terms of what he's expecting maybe for the next decision as we roll along here in 2024. But Lee Price chiming in. And by the way, a lot of people tuning in here. Appreciate you guys. As you guys come in here, go ahead and smash that like button for us. Let's run this up. I know you guys have a lot of choices here on YouTube to look at different content. So we really appreciate you guys for hanging out with us today. Is it true that the market always dumps after the FOMC based on past charts? It was kind of different when they started hiking rates. I'll say this, Mark, and I want your thoughts on this too. There's always a lot of volatility. So we saw the sell-off start yesterday a little bit as we got closer to the day. And now today we're rallying, at least from the Bitcoin standpoint, which we can take a look at that over here, guys. Bitcoin up a little bit, now actually coming down. It's very volatile. It's a trader's paradise for sure on days like this. But I don't think we're going to see anything crazy from a movement standpoint here. I think, a little bit of volatility is probably normal here. But I would say that it's not always bad or always good. It's just always volatile. What are your two thoughts or what are your 2 cents rather on all of that?
Well, we have fallen, right? We have fallen since those, the correction within the spot ETF sell the news event, but more so it's kind of the rest of all the markets, right? And, you don't want to correlate with, the stock exchanges and so on and so forth, but it kind of does. And if you look at how everything's been churning, it's been 3 straight months of gains. Okay. Basically within traditional stock. So like more so they're probably awaiting this minutes more so than crypto.
Yeah.
And that's kind of where the crypto volatility lies, is when you get that tipping of the scale from the more traditional exchange, then boom, here comes the emotional crypto investors, and then boom. And then it's supposed to, kind of going its own way, and it's supposed to be kind of good, right? If we see some panic, if you will, because then people are going to go into crypto, and that's how but it's been doing the opposite, like everybody's saying. It's been dumping. So I think more so we're running a little hot across the board, traditional stocks, traditional exchanges as well. Even though coming off of that ETF correction, I do think that crypto is hot. I think that you can look across the board, a lot of big candles leading up till today. But if all things go to plan and all things that go to what we're expecting, it's probably just going to be some more of the same.
Yeah, I think that's the expectation. It shouldn't be a crazy day for like Bitcoin to either a dump or pump. It's going to be volatile because these days are always volatile. But I mean, I think the decision kind of speaks for itself in this way, that we're expecting to really get no news. And then sometimes no news is good news, right? I mean, we have slowly kind of recovered a little bit since our lows. It wasn't that long ago, just a couple days ago, where we were talking about, Bitcoin at 38,000, right? 38,000 and some change just back about 7-8 days ago, not too long ago. And we were saying, hey, Bitcoin can go all the way down to 36, was kind of our next trough. We never did get down there yet. Not to say it can't happen, because it's, a crazy, crazy market. But we have been on a nice little reversal there, as you guys can see on this chart. I mean, basically just from the 23rd to now, we are building back up slowly, and climbing close to 44K here as we speak. And we're going to talk about some altcoins in this live stream as well. We're going to talk about Ethereum ETFs, so those topics might interest you guys as well. Altcoins, though, getting hit pretty good right now. So Bitcoin holding steady, but altcoins across the board getting hit pretty good. But you wanted to kind of talk on Ethereum ETF a little bit, Mark, and we'll come back to some of the altcoins in particular here in a little bit, as more and more people kind of roll along. Appreciate you guys for tuning in. But you think the Ethereum ETF, a lot of things are happening there that could be maybe going unnoticed a little bit?
Yeah. I think possibly I could speak for both of us. We all understand pretty much everyone watching too, we can understand the magnitude of what a Bitcoin spot ETF will do within revenue. But us as crypto people, what does it actually do? So, I'm kind of a skeptic at heart, as is, but the way that I've looked at it is it's kind of just a mixed bag of like, how is this going to better like our investments, our crypto investments? It's really not, at least not in the first month or 2 months within those 13 that or so that have been, put into action. But within what we're seeing within the Ethereum side of the game, I think there was just a little publication came out. I did a video on it earlier where, they're calling for 4K ETH. And I think that magnitude can be felt more because just look at the simplicity of Bitcoin. Bitcoin is Bitcoin. Everybody knows Bitcoin. All right, I want to invest in crypto. Half the people out there that have to go to Edward Jones to buy an ETF or wherever, they only want Bitcoin. They think crypto is Bitcoin. But, the degens that really don't even know how to use any way to get into crypto, an Ethereum ETF gives them some broader strokes, if you will. That's where you're going to see, the guy that says, hey, I want to get my hands down and dirty within crypto, but I don't really want to like get wrecked on an altcoin. I don't know what's the next 10, 100x. So maybe, an Ethereum ETF is going to be a little bit more volatility, especially with leverage in the fold. And you're going to have more and more of a broader paintbrush, if you will, to go attack crypto, from that ETF side of the game. But not so much in Bitcoin, because Bitcoin is just like, there's one Bitcoin, one ETF. Like Ethereum ETFs can give you a whole connection, kind of an ETF within an ETF, if you will. And I think that's where you can see a lot more price expansion on that front, more so than Bitcoin.
Yeah, I think you're right. I think we're going to see kind of a trickle down effect now that Bitcoin has been established. People are going to quickly see that, yes, Bitcoin's still a great place to store your value. It's still a great place to see gains, but they're going to see Ethereum, right, which is projected to basically 7x from current levels, give or take. Those are predictions across the industry, historical predictions. Basically, 6 or 7x from where we are today versus where Bitcoin projected at 3 or 4x, right? So you take those two combined, I think you're right, making up 70% of the overall market. People are going to look at Ethereum, and I think they're going to look at other cryptos too. One of those other cryptos is XRP, and there's some big news today coming out with XRP, actually. A lot of confusion still, so we'll say that. Not sure if you saw this, Mark. I know you were at work, and we just hooked up recently, but this is some big news that came out recently. Now, I don't believe it's a hack from what I can tell so far, but Mario Nafal put this out. This is kind of the narrative going out. Massive Ripple hack. Chris Larson, which of course one of the co-founders over there at Ripple, his XRP accounts were targeted. Ripple's co-founder Chris Larson reels from a staggering 112 million XRP theft from his personal wallets. The aftermath sees XRP's value plummet. We'll take a look at XRP. Hasn't really plummeted all that much, but we'll take a look at XRP here and focus in on it. Exchanges like Mexi, Gate, and Binance are now embroiled as the stolen funds undergo rapid laundering attempts. And this was the initial tweet from Larson. Yesterday, there was an unauthorized access to a few of my personal XRP accounts, not Ripple. We were quickly able to catch the problem and notify exchanges to freeze the affected addresses. Law enforcement is already involved. He made it a point to say that this is not Ripple, right? So the narrative is like XRP has been hacked, Ripple has been hacked. It looks as if his personal wallets were hacked, and that's what Jack the Ripper's saying here on X as well. You can't hack the XRP ledger. XRP is over 10 years old and still the only coin without any issue. That's why central banks and institutions will use XRP as a bridge currency to settle money. Don't believe the fake news. It was a personal wallet and not the ecosystem itself. Nonetheless, big story. Not good for Larson. Interesting that the authorities are already on top of this. I know that's a lot to unpack here, but yeah, what are your initial thoughts there? And we'll pull up the price of XRP as you break it down, man.
No, he's pretty cool though for cool, calm, and collected within that post without having a little over $112 million jacked from his wallets. I mean, I don't think I'd be personally. But obviously, there's a bigger picture where you have to save faith, and or else there'd be a catastrophic sell-off. If that was actually something where an executive basically was dumping on, our founder, even for that matter, was dumping on his entity, that would be, one for the ages. But no, there's no reason or motive for him to do that, mind you. So, and it's definitely not him, especially if they're law enforcement, because then that's, going to steadily be into like some crazy punishment, more so than he needs to have. So
yeah, I agree. It looks as if his personal wallet was targeted. I don't think this is a Ripple XRP issue. I think this is more of probably a personal issue that somebody got a hold of his wallet and what have you. It looks as if people are the people who can reverse this are already on it. We'll keep tabs on that. That's the information we have on that now. But I do want to talk about the price of XRP because we did get a wick down. But you guys can see that blue line on my screen, right? That's a line that I've personally drawn there in the sand, if you will, because we have a lot of buying pressure that usually comes in right at 50 cents with XRP. And you can see this is dating back to just January. But if we go out to the 1 day, you can see that this is held really strong for a while, going back into August 2023. Sure, we wick down a little bit here or there, right? And this is why I say anytime you can get XRP, for me personally, under 50 cents right now, really good opportunity because it doesn't last very long, right? Very briefly here in September, very briefly here in October, and then we saw a big surge. We actually even got the momentum up indicator flash on our XT algo. By the way, you can get access to that too and know when the best times to get in and out are by using the best trading indicator out there. We both use it, Mark and I, and Mark's an affiliate. This is a company I found earlier back in 2023. But XRP right now, kind of right there, Mark, hovering right at that 50 cent level. Again, we wicked down quickly, though. Look, buyers came right in to push it back up over 50 cents. I know you're a big proponent of XRP. It's a long-term play, I think, for both of us. But do you think this drastically impacts XRP, all this news today? I mean, do you think How do you think this all shakes out? And then obviously, you could speak to the chart a little bit.
The Larson news, or just
Yeah.
the news from the minutes?
No, more or less the Larson news. I mean, if you want to speak to
Yeah,
the minutes too, I don't think the minutes are going to do much to the price of XRP
no,
personally.
no, and XRP kind of follows Bitcoin for the most part, which is kind of unusual personally, because I say it pretty much ad nauseum that XRP is in its own category when you
Yeah,
talk about crypto assets.
it really is.
It's one of those unique cryptos. I have a handful, about 3 to 5 of them, but for some reason it does kind of have an overlay within Bitcoin. Trades alongside of it for the most part, and I think that's what we're going to see. But within the Larson stuff, guys, anything that, especially because you can see the support at steadily above 50 cents. That's going back almost 6 months, growing on that number. So it's more so going to get bought up, and it's just going to be an opportunity for a lot of people out there. I mean, this is the opposite, the inverse principle of selling the rumor, buying the news. It's the
Yeah,
opposite. Usually it's when you hear good things. This is going to be the opposite. People are going to be, selling the news and buying the rumor, if you will, because it has nothing intrinsically wrong, and especially because 112, what is it, $112 million? I mean, that is just a
yeah,
blip in the scale of XRP, in terms of their sheer market cap. But
yeah,
it's not even going to be a ripple, pun intended, within their price,
yeah,
as long as there's nothing further where 5 more executives get hacked, or this is just some onslaught of an attack, or some crazy story that this is just the tip of the iceberg. But $112 million, as funny as it sounds, is just a spit in the bucket, especially if it's already been claimed as a crime, not necessarily something where it was somebody from Ripple's fault.
yeah. I agree. I agree. I think obviously from a price standpoint, this is right where we were. So it's not tanking the price. I know people are saying that. People love to kind of create this crazy narrative. Oh my gosh, freak out mode. Don't think this changes anything. And like you said, we'll continue to kind of track it and see what happens. Leroy chiming in talking about ICP. We love that one too. But before we get into some other altcoins and stuff like that, Yankee says, "Come on, Zach. Anytime is a good time to buy now on XRP. Court case is not over yet." No, it's a great point. I'm just saying the best time is when it dips below 50 cents. I agree. I mean, you could make the argument that it's still cheap at 60 cents and 70 cents. I get that, especially if you have a long-term mindset. But, the best time, in my opinion, right now is what just happened. It wicked down below 50 cents. Anytime that happens, I think that's a really good opportunity. Rates holding steady. Yeah, let's get back to kind of the overall conversation here about the FOMC meeting, which is coming up pretty soon. And it sounds like we just got the decision, Mark, based on that comment right there. I'm sure we did. Let's go ahead and see. Usually the decision comes down at 2, and then meeting takes place at 2:30. So let's see what happens here. We'll see if there's an official word. And if you can find one out there, if somebody in the chat knows that it's official, it probably is by now. Let's see. Okay, there it is. Breaking right there. The Federal Reserve has continued to pause rates with the FOMC decision. So yeah, nothing out of the ordinary there. We knew that was going to happen. But forecast is no change. That's what we get. Powell speaks at 2:30. That's really where the focus needs to be now. Expect volatility, right? There you go. Let's check the potential liquidation in the short term before FOMC. And we're taking a look at, some of the big guns like Binance, Bitfinex, BitGet. People will take profits here because they'll freak out, Mark, with these big events. And a lot of times they buy right back in when it's a nothing burger, which is kind of funny. But you will see some volatility. Yeah. Yeah, I mean, why not, right? Because then if you do get a little bit of a sell-off or whatever, you could just buy a little bit cheaper, right? Buy a little bit of a
100%.
discount.
And that's not for everybody too, mind you. This is, a lot of people are, hodlers. A lot of people want to make that 5%. And this is just like, on your swing trade calendar. If
Yeah.
you're in for it, I mean, you got it circled. Hey, I'm ready to make my 3 to 5%, and obviously a high volume of capital to make that trade, but it's there pretty much every time we covered FOMC, cover these big, macro, political, whatever events. It's there if you want it. It just doesn't
Yeah.
fit everybody's bill.
For me, I don't really trade Bitcoin, and I know a lot of people do. I stack Bitcoin. But for altcoins, I think those are ripe for trading on days like this where you expect volatility, because usually there's more volatility too. I know you've been trading
Oh yeah.
Solana. You've been trading Solana a lot. Just made a nice trade as it popped up over $100, seemingly out of nowhere. Weren't we just at $80 with Solana? It's crazy
Mhm.
how volatile Sol is, right?
Yeah,
Even though it's a big crypto, it's still
and I
super
yeah,
volatile.
and I never really even, and it's crazy too because the community within there, it kind of fluctuates. Like we can cover Solana, and then it's the hottest crypto on the internet, and we can't make enough Solana videos, and everybody wants them, one after another. But then it's weird. It's like Solana's up over 100, probably the best outperforming crypto in 2023, and nobody really cares about Solana. And
Yeah,
I think a little bit is that because of their success of their memes that they've had. I think that's
100%.
where everybody's eyes are. But little does and that's kind of the opposite where yeah, you get more exponential growth, more percentage gains, but if the
Yep.
meme coins are going and doing well, Solana is going to be booming, and that's what I think
100%.
helps. That and I don't think people realize that intrinsically they just want. Oh, I got into dog whiff, or or they get
Yeah, yeah. I would
into
have.
yeah, and it's just
Yeah.
like it yeah, great, you won that, but you know you're going to be risking yourself with all these memes when you can be ripping 5 to 10% with Solana every day or
Yeah.
so if you really got into the day to day with it. And I didn't even know that, truthfully, if we were going to be honest. I've just been doing it for over a year, and if you actually Google it, I think we did it. It is the number. It is you Google most volatile crypto to day trade, swing trade. Solana is number one, and I
Yep.
I didn't even have to. That was kind of on accident too, but it's just coincidence, I guess.
Yeah, it makes sense. I mean, and going back to your meme coin part there too with Solana, they've been amazing. They've been amazing to trade, and I've been trading them. But here's the thing: I'm trading Solana meme coins and just stacking Solana, because when you're trading them, on the DEX side, you're swapping in with Solana. So I've got the Radium, DEX tied into the Phantom wallet. By the way, Phantom wallet, which is huge already, had more downloads than the Coinbase app in the last 3 weeks. Why? People are trading Solana meme coins like crazy. Pretty crazy. So huge month already for Phantom Wallet. I downloaded it actually. So I've got it. And basically I'm looking at Solana meme coins. Hey, this is a great opportunity. If I put 5 Sol in and take 15 Sol out, I'm just stacking Sol. So it's the same concept with ERC20 tokens, right? We see all the meme coins on Ethereum, Pepe,
Hmm.
right? Shiba Inu. What's the motive there? What's the real goal? The real goal is to stack ETH, right? Back in 2021, you're putting 1 ETH into SHIB, hopefully getting 10 ETH out or more, right? Depending on when you got in and when you got out, all of that. Same thing here. Same thing now happening on Solana. And I think what's happening, Mark, if we're getting inside the heads of investors here, I think what's happening is this. People are looking at Sol as the potential opportunity to grow more than Ethereum in this next bull run. So like they were stacking Ethereum when it was hundreds of dollars back in 2021, they want to stack Solana because it's hundreds of dollars right now, or $100, thinking it could go 5, 6, 7x from here, maybe even more. Who knows? But just that strategy alone makes a lot of sense, because we saw it in 2021. If you were around, that was the game plan. That was the goal. Now you're just seeing it on a different chain, and things have changed a lot in the last 3 years. We're seeing meme coins launch on Chronos. We're seeing meme coins launch on Avalanche. We're seeing a lot of these layer ones really grow, and people are seeing the benefit of actually getting on these other chains, while Ethereum was kind of just only the dominant force along with BNB, 3 years ago, or the Binance Smart Chain. But yeah, really interesting stuff. You're right, though. Solana has just been shocking to a lot of people. There's a lot of I think there's a lot of butthurt people too on Sol. Like you could tell, like if you didn't get into Sol when it was reversing with FTX, or you haven't been a long-term investor, a lot of people are still pissed, and they love to FUD Solana. But I think what the founders building here is certainly a competitor to Ethereum. I don't think it's going anywhere. I think it's going to be one of those mainstays here in this next bull run. And I'm really curious to see what happens with the phone, the whole Saga phone, and see if that can take off. Because then it could get really wild. So let's see here. What else is going on? Let's see if we got any top gainers here in the altcoin space. Appreciate you guys for popping in here too. We're going to have the meeting coming up in 20 minutes. Haven't decided if we want to listen to Jay Powell go through the whole spiel, or maybe just follow it in real time. We got a live blog we can follow. So let me know your thoughts on that in the comments. So this is another layer one that's been crushing it, huh? Sui. Is it Sui or Sui? I've heard it said like 18 different ways. Sui or Sui? I think it's Sui. But yeah, Sui has been crushed. Yeah.
Yeah, it's funny too, because then you have Say, so
yes.
Then it's like I'd probably can guarantee you that somebody's made that horrible mistake. But luckily, they've both been having success. So if you got them confused with each other, you might have lucked out.
Yeah. And Sui in particular, they are, if I'm not mistaken, they're both listed on the top tier exchanges basically. But if I'm not mistaken, this is a US based company, I think. I think it's out of Silicon Valley too. Let me see here. It might be Say. I even confuse them too. Let's see. It doesn't have it on the breakdown, but yeah, I'm pretty sure it's Sui. That's it's out of the US too. Yeah, a lot of new layer ones. We've talked about Aptos before. I think Aptos is another one. It's quiet right now, but a lot of VC money there. All the Facebook investors are in Aptos. There's going to be a nice surge of layer ones. You look back and see what Solana and Avalanche did in that previous bull run. Man, if you were ahead of those before they were running, because when they started running, you were too late, right?
Yeah,
kind of. And you had to wait until Sol crashed and AVAX crashed. Otherwise, you were chasing and you just got probably wrecked and probably pushed out. But there's going to be other ones. This next phase, this next run through, I think a lot of people are looking for those next layer ones. There's Aptos, top 30. Nobody's talking about it. Injective.
I'm not a big fan of Aptos.
You're not, or are?
No, I think that's a sleeper. I really think that's a
similar to
interesting
Solana.
way that they're going about things. And
yeah, I agree. Mark Cuban recently put out a tweet saying that he's invested in 2 big cryptos outside of Bitcoin and Ethereum. You know which 2 they are? Did you see that tweet?
I did. I just forget the second one.
Polygon and Injective. One of the top AI cryptos. He's heavily invested in this one too. So that's another one. Look at that year over year. Insane. Over 1,000% on Injective already, sitting at a $3 billion market cap. So there's going to be a lot of layer ones. And really, you think about Injective at a $3 billion market cap, still very early for a top tier layer one, that can get to 40, 50, 60 billion relatively easily in bull runs. It's going to be interesting to kind of see how that all plays out. Real quick plug, guys. By the way, hit that like button for us. Definitely helps us out. Real quick plug, though. I want to talk about the Blockchain Futurist Conference for a minute. So Mark and I are planning to be out there. I was out there last year for the event. Great Ethereum conference, by the way. If you have never been to this one, just an awesome time out in Toronto. This one coming up in August. We've got some VIP media passes. We're going to be covering the event while we're there, but we're also going to have some discounted tickets for everybody out there listening. So don't buy your tickets yet, but stay tuned right here on the channel. Make sure you're subscribed so you don't miss out on that opportunity, or on Mark's channel if you're watching over there, because we're going to have a great offer for you. Big discount on tickets to this event out in Toronto. Amazing venue, by the way. It's at the Rebel which is this outdoor indoor nightclub overlooking the city in Toronto. Great event to get your foot in the door, meet people, network. That's what it's all about in this space. And you have the ability to do it. Everybody does. Every single person. That's the great thing about crypto. You don't have to have $1 million to be a accredited investor in the stock market. You go out there, make connections, and there you go. Then you're off and running. You start to get in maybe some private launches and all of that sort of thing. We've been talking about that on the channel as well. That kind of change in strategy, getting into some of the private companies that then go public. So yeah, be on the lookout for that. Going to have a lot of insight on that. We're about 15 minutes away from JPOW coming up. Mark, what do you think? Or you think we're going to see a ton of volatility here today? What else is on your mind?
I told you, I think it's going to be interesting more so, I think, on the stock side of the game, more so than crypto. I think that's what we know how the crypto can react, but I think it's just going to be flat unless he drops something, which I don't think he is. I would be shocked. I would be shocked because it's that no news is good news kind of mantra. I think, what are they going to say about lowering rates? I think that's what another crucial thing is. What are they going to say? What is it? 23 week or 23, the highest rate in 23 years right now. It's just kind of, everybody's waiting on them to change. But if they do lower rates, that's my point. Like, it's going to happen. It's going to happen. It's got to happen. I think we're going to see bets before that actually happens, because I think what they'll do is take a more gradual approach. But you know how it works with everything else. They're going to try to somehow twist this in the election a little bit, twist it into some broader storyline, and keep everything kind of kosher as we get through this year. But it's not going to be anything drastic. I mean, the numbers, they're not going to shred the numbers right before in an election year, right there in front of us. It's just not going to happen.
Yeah, 100%.
It's just
Kingpin's in the house.
Stalemate.
Yeah, I agree with you there. I think it's going to be a nothing burger, really. I mean, a little bit of volatility. So if you're a trader, you love that. If you're a longtime hodler, I don't think that you make any crazy decisions today. Yeah, I did stop into the space last couple nights, actually. Kingpin, I like what you guys are doing over there. I appreciate you, man. Yeah, that was really cool. You guys got some smart people over there, and I'm always trying to learn. So yeah, I was hanging out for a few hours. I think I was up late, and man, you guys go for a while too. So that was cool stuff. So Cardano's way better. That phone is garbage. The Cardano versus Solana gang. I hear you. I've got more Cardano than Solana. I will tell you that. But if these Solana meme coins continue to go absolutely parabolic, I don't know, man. I'm stacking some Sol right now. I actually just got my ass kicked on one so far. But Bonk was great so far. Myro's been good. I was able to profit on that one so far. The thing is with these meme coins, you could lose on 9. You hit on the 10th one, and you're made, right? Not, you know what I mean? You got your money back and then some. You've won, right? That's the thing with these meme coins. Don't invest what you're willing to lose, right? So, for me, it's just a few $100 at a bunch of them, and you see what happens, right? Let's see here. Crypto crash is good. We can buy the dip our fingers in other ways. That sounds a little weird there, Roberto. What do you mean? Dip your finger? Where are you dipping those fingers, man? I don't know about that. What do you guys think in chat? I don't know. Roberto's kind of dipping fingers. I don't know. And then he just, throws a little good afternoon in there. I don't know, Roberto. I don't know. Already a great day for Bitcoin. Busta Crypto, always in the house. Appreciate you, brother. Do you still talk to Austin? No, I hate that dude. I'm done talking with him. No, yes, I still talk with Austin all the time. He just doesn't like to get on live streams a lot. He likes to keep his days and afternoons open for naps and golf and things like that. Cardano, okay. How do you guys feel? I feel pretty good today about, I'm guessing, talking about the overall decision here. I'm not doing anything crazy. Are you trading today, Mark? Are you making any moves? Are you looking? Did you buy anything today?
Well, you know how I mean, I'm not like looking to, how should I say, like open a long-term position, but like this is something where I have my alerts and my obviously with XT Algo, I use trading view alerts with a bunch of the cryptos I got in my watch list, and I really want to find a way to make this available for everybody. So that's gonna be something we're working on the channel. Um, Probably something with a community format, but just because it is something where outside of these notifications, it simply works, and you're not gonna claim the absolute bottom, the absolute peak, but it gives me enough of a margin where I can execute some trades on volatility. I can confirm some crypto trades that I'm in, and it's more peace of mind. And it's just literally a little over $1 a day, which when you're paying $30, $40 to transact, in some cases it's kind of a priceless tool, especially when you really just need that extra nudge without actually being a financial advisor.
100%. Yeah.
So,
And if you guys want to purchase it through Mark, his discount code is running right now, NYFC. If you guys don't know, it's a company that I started not too long ago. And I'll tell you what, I've been using it as well and super pumped that other people. What brings me joy is getting the emails of like, hey, here's another successful trade I made with this, people chiming in on comments on YouTube channels. That's what it's
mhm.
all about. Like this tool's meant for everybody, whether you're a beginner, whether you're, a seasoned trader, anybody can use this. By the way, crypto, stocks, Forex, you want to trade precious metals, you can do that over there as well. And yeah, it's just been awesome to see so many people using the tool and it working, right? And I wanted to keep it simple. Shout out to my developer because without him, wouldn't be able to do this. Obviously, I don't have the tech background, just had the idea. And yeah, it's worked out really well. And I'm working on getting it in the hands of some businesses as well, which will be pretty cool. And yeah, so guys, it's a 30-day money back guarantee too. So if you want to try that today, instead of 47, it's going to be 37. Instead of 125, it's going to be 90. And then instead of 500, it's going to be $400 for the year. So check out those links down below. While we're on the conversation, got an unbelievable deal with NordVPN too. 4 months free with NordVPN. If you want to just have privacy on the internet, you want to keep your crypto assets safe, we've got a great offer for you. The best offer you're going to find with NordVPN, trusted VPN server provider. Been using them for 5+ years. They are my go-to. I don't know if you guys can see the top of my screen, but I've got the plug-in right now. Anytime I'm trading, I'm using Nord. So check out their link down below. So Bitcoin selling off a little bit as we get closer to the decision here, 8 minutes away. Bitcoin selling off a little bit here in the 1 hour. BNB down a little bit. Solana actually coming down. Maybe might be a time to look at
Yeah,
Sol, right, on the indicator, as we were mentioning.
and that's another thing. A lot of people are in positions, whether they be future positions. The market has been running hot, and there are a lot of people that are out there just straight up hedging before
Mm,
this this minute.
yeah,
They're not fully getting out. They're just kind of like they're
planning on
taking
the other
1 foot
side.
out or 1 foot in, just in case there's something catastrophic. Which I'm not telling you guys to do that. I'm not telling
Yep.
you guys to do anything. But I'm just saying that's something where we could see a little bit of volatility before the market set off. And back on XT Algo, guys, I'll tell you guys a little blip into. If you guys want more insight, obviously check out my channel. Zach will put the link down below in the description and in the comments as well. But three of the cryptos that I do look to, that I will be looking at in this day for my personal. I'm looking to execute a trade on some of this volatility. Is obviously we've talked about Solana, Injective, as well as Constellation. So those are three that I've really keyed in on
Mm.
for this specific way to look at crypto trading. So yeah, but back to you, Zach.
No, that's you were telling me about that constellation one. Not a lot of people know about that. And I am putting Mark's channel there down below in the description of the video. Just put it in chat there for you too. Make sure you guys go give him a subscribe over there. He's got a YouTube channel that's growing every single day. It's growing nice. He's got a ton of great content over there. So I just linked his channel in the description too. Go give him some love over there. Would appreciate that from everybody here on the stream. So Yeah, you're trading Constellation. That's one of those other ones, very volatile, right? You've been using over on XT. Um,
Just a
have
few
you?
metrics I look at. So
Yeah,
obviously, not to give away the secrets and all, but that's why you get
give them
involved with the channel.
away. Give
So
the give the
no,
secrets up, man.
yeah, we'll see you guys on the channel. So
Okay. All right. There we go. All right. There we go. So yeah, if you guys aren't yet subscribed over to Mark, make sure you guys do so. We're minutes away from hearing what the FOMC decision will be. And I don't know. I don't do we really feel like listening to J Powell, go on and on and on. I think what we'll probably do is
do a window
probably
with the
follow the
caption.
blog. Yeah,
Yeah,
that's what I'm thinking. That's what I'm
try that.
thinking. We'll listen to him a little bit here and there, but this is Mark's channel, by the way, guys. He's got over 4,000 subs right now. Let's help him get to 5K a little bit quicker. Go over there and show him some love. Links down below in the description. Let's see what else is popping off here. Anything? Let's see. Oh, this is a good thread. I actually want to go through this a little bit. If you guys don't follow this guy over on Twitter, he's really, really good. Crypto King Kayur, Kayur. He does some great threads, always does some great content. I follow him quite a bit over here. So let's see what he's got here for us. Basically, what Bitcoin and crypto traders must know here as we're minutes away. The U.S. Federal Reserve, led by Jay Powell, set to announce its monetary policy decision on benchmark interest rates. By the way, that decision has been made. If you're just checking in here to the stream, if you're just checking in, the decision is made. We're pausing. We're staying still. Nothing. Expectations are high for insights into the central bank's approach amid economic data and inflation concern. So, investor expectations. Investors are anticipating that the U.S. Federal Reserve may start easing monetary policy for March. We're not going to get the rate cut yet, but hopefully that's the next thing we see. About half of traders polled forecast an interest rate cut in March. Okay, so about 50% of the traders polled are looking to see a rate cut in March, while economists expect rate adjustments likely by June. I have been hearing that this the timeline's pushed back a little bit in terms of when we'll see rate cuts. So we'll see. I do know one thing. They're going to want to prop up this economy as we get closer and closer to, the election, right? So we're probably going to get at least a few cuts leading up to that because that's how things roll, right? Maybe even some positive sentiment from Jay Powell around those areas as well. We'll see, right? But
Yep.
reasons for unchanged rates, despite previous suggestions of potential rate cuts, strong economic data prompts economists to predict rate adjustments might occur later. So again, that's the reason why the can has been pushed a little bit further down the road because we did have a little bit of a spike in inflation coming back in. Okay. And there are some people out there that feel like we're not out of the woods just yet. Philadelphia Federal Reserve President Patrick Harker. Why are you smiling over there? What's going on? What am I missing? Is there something in the comment section? I'm going to get there in a minute.
The Squid Grow people are coming in strong. So
Oh yeah.
they're back,
Crypto Wendy's been firing them up over there. I
taking
don't know
over.
what's going on over there.
Yep.
Who's their leader? Shibtoshi or something like that? All right, Squid Grow, fire it up. Smash the like button. Make sure you subscribe. We don't care. Everybody's welcome here.
Yep. I actually got to get going, Zach. I just wanted to say goodbye to everyone. And
okay, all right, brother. Yeah,
enjoy the minutes. Thanks all for subscribing. Appreciate you guys, and see you over on the channel in the next live. All right.
Yep, definitely, guys. Go show them some love. Not Your Father's Capital. There it is on screen, down in the description. Show Mark some love. Hit that subscribe button. See you, brother. All right, so where were we? Oh, we were going through that thread, right? All right, so let's continue here. Federal Reserve President Patrick Harker emphasizes a cautious approach, stating we don't have to do it fast, and we're not going to do it right away. Harker's comments contribute to the nuanced stance ahead of the Fed meeting. Global market impact. World shares show limited progress as investors await clues on the U.S. Fed decision. We already have the decision now. We're staying pat. Nothing happening. The dollar is on track for its most significant monthly gain since September, and gold prices are influenced by rate outlook discussions as well. And Analysts suggest a pause in the current Fed meeting. That's what we got today. The consensus anticipates a series of rate cuts, though, still in 2024, totaling 125 basis points, with the majority expected in the latter half of the year. I agree with that. I do think we're going to get more of them as we get closer to the election, right? Propping up the economy, making it look like everything is perfect, everything is well, right? Market perspectives indicate a pause in the current meeting, which we got. The ongoing debate revolves around timing and the extent of future rate adjustments. So, historical data. This is kind of where we've been here. Right now, the forecast 5.50%. That's exactly what we got. Okay, that's where we were in December. And that's what we got here today as well. Summary: as the Federal Reserve navigates economic indicators, global markets brace for potential shifts in interest rate hikes impacting various sectors. And there you go. So good thread there. Always a good thread. All right. So J-Pal is going to be taking the stage here in just a second. I don't know if I want to listen to the whole thing live. I don't know if we want to do that. Do we really? Maybe just follow the minutes, which we can do. I found a nice little way to do that over here. This is just live analysis from the Fed meeting itself. So rate cut expectations have shifted significantly since the Fed meetings in December. Policymakers signaled at that gathering their next move would be a cut instead of an additional hike. So some people think it could happen in March. Other people think it could happen a little bit further down the line in June. All right, we'll go ahead and listen to a little bit of this Fed meeting over here. I'm going to pull up my phone, and we'll just we'll listen to a little bit of it here and there, off and on, as we roll along. But we'll have this up. We'll keep the updates rolling here. And, of course, I want to be able to watch the markets more than anything here as we continue to listen in. So, all right. Appreciate everybody tuning in here. We're going to break down the news, talk about it in real time. I know you guys have a lot of decisions out there on YouTube, so let's listen into what they're talking about on Bloomberg.
Dovetail this pre-emiser with the work of Michael Ferroli and Bruce Kasman and the basic idea of the IMF the other day with 1 year, 2 years, 3 years of what any and all Americans, including Biden and Trump, would say is subpar GDP. How many cuts do they have to come down just to catch up with what the IMF's modeling out?
Great question, because as much as we're all focused on March or May or June, it's the total amount of cuts that the yield curve is sort of discounting. And we're pricing in the endpoint after the cuts at 3.25. That's still north of what the Fed argues neutral is, which is 2.5. So I think it's about the total amount of cuts. In a soft landing, 200, 250 basis points of cuts are completely reasonable. So there's more room for 5-year treasuries to decline or real rates to decline, even in a soft landing. In a hard landing, they have to go into accommodative territory. That's 2%, 1% Fed funds. I think just having those two scenarios in mind can sort of guide or put guardrails around where interest rates should go.
Okay, so they're talking a little bit about not only when the rates start, but how many we get for the total of the year. Let's go ahead and listen into Jerome Powell a little bit here.
The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 165,000 jobs per month, a pace that is well below that seen a year ago, but still strong. The unemployment rate remains low at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up on balance over the past year, particularly for individuals aged 25 to 54 years, and immigration has returned to pre-pandemic levels. Nominal wage growth has been easing and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer run goal of 2%. Total PCE prices rose 2.6% over the 12 months ending in December. Excluding the volatile food and energy categories, core PCE prices rose 2.9%.
Gold is up a little bit right now. Gold is actually moving up a little bit.
Continuing evidence to build confidence that inflation is moving down sustainably toward our goal. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. Over the past 2 years, we have raised our policy rate by 5.25 percentage points, and we've decreased our securities holdings by more than $1.3 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. We believe that our policy rate is likely at its peak for this tightening cycle, and that if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. But the economy has surprised forecasters in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. The economic outlook is uncertain, and we remain highly attentive to inflation risks. We are prepared to maintain the current.
So he's going through the whole spiel right now. I really want to listen to the question. So again, this is why I want to interject here. Exactly what we thought would happen. Okay. He talks about the good side, the bad side, still got to wait for data to present itself, blah, blah, blah. Big nothing burger so far. Market's responding here. We're looking at the 1 minute chart on Bitcoin. We are bouncing a little bit, but yeah, that's good. That's good to know, right? Because so far there's been nothing out in left field, just volatility.
Maintain the current target range for the federal funds rate for longer, if appropriate. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. We will continue to make our decisions meeting by meeting. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our questions.
Here we go.
Sheena Smilik from the New York Times. Thanks for taking our questions. Obviously, in the statement and just in your remarks there, you note that you don't want to cut interest rates without greater confidence that inflation is coming down fully. I wonder, what do you need to see at this point to gain that confidence? And as you make those decisions, how are you weighing recent strong growth in consumer spending data against the sort of solid inflation progress you've been seeing?
Sorry, say that last part again.
How are you weighing the growth data and consumption data, which have been surprisingly strong, against inflation data?
Okay, so what are we looking for to get greater confidence? Let me say that we have confidence. We're looking for greater confidence that inflation is moving sustainably down to 2%. Implicitly, we do have confidence and it has been increasing, but we want to get greater confidence. What do we want to see? We want to see more good data. It's not that we're looking for
Data.
And so we're looking at continuation of the good data that we've been
The
seeing.
good
A good
data.
example is inflation. So we
good
have 6
data.
months of good inflation data. The question really is,
I love that.
6 months of good inflation data, is it sending us a true signal that we
The
are in
data.
fact on a path, sustainable path down to 2% inflation? That's the question. And the answer will come from some more data that's also good data. It's not that these 6
How
month
many
data
times
isn't-
can he say
isn't low
data?
enough. It is. It's just a question of, can we take that with confidence that we're moving sustainably down to 2%? That's really what we're thinking about. In terms of growth, we've had strong growth. I mean, if you take a step back, we've had strong growth, very strong growth last year, going right into the fourth quarter. And yet we've had a very strong labor market, and we've had inflation coming down. So I think, whereas a year ago we were thinking that we needed to see some softening in economic activity, that hasn't been the case. So I think we look at stronger growth.
Right.
We don't look at it as a problem. I think at this point we want to
want
see
bad
strong
data.
growth. We want to see a strong labor market. We're not looking for a weaker labor market. We're looking for inflation to continue
Exactly.
to come down as it has been coming down for the last 6 months.
And I'm sorry if I could just follow up very quickly. When you say that
Have not.
you want to make sure that it's a true signal, is there anything that you're seeing in the data that makes you doubt that it's a
Data.
true signal at this stage?
No, I think I would say it seems to be the likely case that we will achieve that confidence, but we have to achieve it, and we haven't yet.
Okay.
And so, I mean, it's a good story. We have 6 months of good inflation, but you can, and you know this, you can look behind those numbers and you can see that a lot of it's been coming from goods inflation, for example, and goods inflation running significantly negative. It's a reasonable assumption that over time, goods inflation will flatten out, probably approximate zero. That would mean the services sectors would have to contribute more. So, in other words, what we care about is the aggregate number, not so much the composition, but we just need to see more. That's where we are as a committee. We need to see more evidence that sort of confirms what we think we're seeing, and that tells us that we are gives us confidence that we're on a path to a sustainable path down to 2% inflation.
Nick Timros of the Wall Street Journal. Chair Powell, it seems to me you raised rates rapidly over the last 2 years for two reasons. One was the risk of a wage price spiral. Two, there were risks of inflation expectations becoming unanchored. This morning's ECI report for the fourth quarter shows private sector payroll growth running at a sub 4% pace. Inflation expectations are very close to where they were before the inflation emergency of the last 3 years. And given that you appear to have substantially cut off these two tail risks, and that you've judged year-to-date current policy as well into restrictive territory, what good reason is there to keep policy rates above 5%? Are you really going to learn more waiting 6 weeks versus 3 months from now that you have avoided those two risks?
So, as you know, almost every participant on the committee does believe that it will be appropriate to reduce rates. And for partly for the reasons that you say, we feel like inflation is coming down. Growth has been strong. The labor market is strong. What we're trying to do is identify a place where we're really confident about inflation getting back down 2%, so that we can then begin the process of dialing back the restrictive level. So overall, I think people do believe, and as you know, the median participant wrote down 3 rate cuts this year. But I think to get to that place where we feel comfortable starting the process, we need some confirmation that inflation is in fact coming down sustainably to 2%.
If I could ask differently, if you hold rates high as inflation moderates, as it has been, target rates will exceed the prescriptions of the Taylor rule or experience. What would be the reasoning for holding rates higher than the levels recommended by those rules in the current instance?
Well, I think, as you know, we consult a range of Taylor rules and non-Taylor kind of rules. We consult them regularly. They're in our teal book, and they're in all the materials that we look at. But I don't think we've ever been at a place where we were setting policy by them. And they're, depending on the rule, it will tell you different things. There are many different formulations. Another way to think about it is implicitly is so. In theory, of course, real rates go up if holding all else equal as inflation comes down. But that doesn't mean we can mechanically adjust policy as real rates, as inflation comes down. It doesn't mean that at all, because for one thing, we don't know. We look at more than just the Fed funds rate. We look at broadly financial conditions. But in addition, we don't know with great confidence where the neutral rate of interest is at any given time. But that also doesn't mean that we wait around for to see the economy turn down, because that will be too late. So we're really in a risk management mode of managing the risk, as I mentioned in my opening remarks, managing the risk that we move too soon and move too late. And I think to move, which is where almost everyone on the committee is in favor of moving rates down this year. But the timing of that is going to be linked to our gaining confidence that inflation is on a sustainable path down to 2%.
Howard.
Hi, thanks, Chair Bell. I'd like you to key in on the use of the word in the statement that inflation still remains elevated. You've pledged to cut rates before inflation reached 2%. So that implies that there's some sort of intermediate step here on inflation, and that a cut would be consequent with a change in the statement language that inflation remains elevated. What's the step down from there?
Yeah, I don't know that we worked out the particular statement language and that kind of thing. I would just say, if you look at where 12-month inflation is, and it's still well above core is 2.9%, for example, 12 months, which is way down from where it was. Very, very positive development, very fast decline, and the case is likely that it will continue to come down. So that's where it is. But we're wanting to see more data.
So if I could follow up on that, the statement allows that you want greater confidence on inflation falling before you cut, but it doesn't mention the other side of the mandate, a slide in employment. Would a slide in employment also bring you to the point of cutting rates? Yes.
So let me say that we're not looking for that. It's not something we're looking for. But yes, if you think about, in the base case, the economy is performing well. The labor market remains strong. If we saw an unexpected weakening in certainly in the labor market, that would certainly weigh on cutting sooner. Absolutely. And if we saw inflation being stickier or higher, or those sorts of things, would argue for moving later. In the base case, though, where the economy is healthy and we have ongoing growth, solid growth, we have a strong labor market, we have inflation coming down. That's what people are writing their SEP around. And in that case, what we're saying is, based on that, we think we can and should take advantage of that and be careful as we approach that question of when to begin to dial back restriction.
Claire Jones, Financial Times. Just to circle back to the greater confidence aspect of the statement, there's been a lot of unanimity in recent meetings. I'm just wondering, going forward, when it comes to all needing greater confidence, is the unanimity, or at least consensus among FOMC members, about what the threshold for that greater confidence is? And if not, could you maybe tell us a little bit about the discussion today on, what the variations between FOMC members was on what constitutes enough confidence to cut rates, and also if there was any variation on how quickly that greater confidence threshold could be reached. Thank you.
We're not really at that stage. There was no proposal to cut rates. Some people did talk about their view of the rate path. I would point you to the SEP as good evidence of where people are, although it is one cycle later. So, we're not at a place of really working out those kinds of details, because we weren't actively considering moving the federal funds rate down. I will say there is a wide disparity, a healthy disparity of views, and you see that in public statements, in the minutes and the transcripts when they're released every 5 years. So we do have a healthy set of differences, and I think that's actually essential for making good policy. We're also able to reach agreement generally because we listen to each other, we compromise, and even though not everybody loves what we do, they're able to, for the most part, able to join in. To me, that's a well-functioning public institution.
Rachel.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. So over the past few years, there have been all these real-time indicators that helped us gain a sharper understanding of where the economy was, like open table data or office attendance. You've talked about vacancies in the past. And I'm wondering at the start of this year, what might be on that dashboard for you that's giving you the clearest picture of the economy, including on rents, if you could touch on that.
Including
Rent costs.
Yeah. Well, so we're not, it's not the pandemic, so we can actually rely on more traditional forms. People are working, they're getting wages, and the economy is largely reopened and is broadly normalizing, as you see. So I wouldn't say we're looking at that sort of more innovative data as much. You point to rent. So, of course, we follow the components of inflation very carefully, which would be goods inflation. I talked about that a little bit. You mentioned housing inflation. So the question is, when will these lower market rents find their way into measured rents as measured in PCE inflation? And we think that's coming. And we know it's coming. It's just a question of when and how big it'll be. So that's in everyone's forecast, I would say. So that will help. But at the same time, we think goods inflation will probably, it's been giving a lot of disinflation to the effort, and probably that declines over time, but it may well have some more time to run. The supply chains are not perfectly back to where they were. In addition, it takes time for the healing process to get into prices. So there may be still a tailwind. We'll find out with that. So we look at the things that relate to our mandate very carefully, and as you would imagine.
I guess just as a quick follow-up, do you feel comfortable at this point saying the economy has reached a soft landing, or is that part of looking for more confidence?
No, I wouldn't say we've achieved that, and I think we have a ways to go. Inflation is still, core inflation is still well above target on a 12-month basis. 12 months is our target. Certainly, I'm encouraged, and we're encouraged by the progress.
Hold on one sec, guys. I'm trying to match it up.
Encouraged by the progress, but we're encouraged by the progress, but we're.
Let's see here. Where's the Bloomberg? We ain't missing much
progress, but
really, nothing's really going on.
Inflationary process has come through the healing of supply chains and also of the labor market. So you've seen that other set of factors is really different from other cycles, and has brought that, working with tighter policy, which has enabled the supply side to recover. I think is that mixture has been behind what has enabled this. So no, we really do think that we're having an effect broadly across the economy. I would point to the interest sensitive parts of the economy, as well as spending generally. But it's a joint story. It's a complicated story.
But how much restraint are you actually imparting to the economy, would you say, relative to the neutral rate?
I think it's of course, that it's not something you can identify with any precision, but a standard approach would be to take the nominal rate, 5.3%, let's say, and subtract a sort of a forward measure of inflation. If you do that, and there are many ways to calculate the neutral rate, but that's one I like to do. And you're going to get to something that is materially above mainstream estimates of neutrality, of the neutral rate, you will. But at the same time, you look at the economy and you say, this is an economy that grew 3.1% last year. And you say, what does that tell you about the neutral rate? What's happening, though, is the supply side has been recovering in the middle of this. So that won't go on forever. So a lot of the growth we're seeing it isn't just a tug of war between interest rates and demand. You're getting, more activity because of labor market healing and supply chains healing. So I think the question is, when that peters out, I think the restriction will show up probably more sharply.
Thank you. Sorry. Thanks for taking the question, Mr. Chairman. You mentioned earlier we're not seeking a weaker labor market. I think you said. Can you talk a little bit more about that? Do you think the labor market now is back to quote unquote normal, and that we can achieve the inflation target without wage gains coming back down to what they were pre-pandemic? Even with today's ECI levels, they were still above those pre-pandemic levels?
I think the labor market, by many measures, is at or nearing normal, but not totally back to normal. And you pointed to one or more of them. So I think, job openings are not quite back to where they were. Wage increases rather are not quite back to where they would need to be in the longer run. I would look at it this way, though. The economy is broadly normalizing, and so is the labor market. And that process will probably take some time. So wage setting is something that happens. It's probably will take a couple of years to get all the way back. And that's okay. That's okay. But we do see, you saw today's ECI reading, the evidence is that that wage increases are still at a healthy level, very healthy level, but they're gradually moving back to levels that would be more associated, given assumptions about productivity, are more typically associated with 2% inflation. It's an ongoing process, a healthy one, and I think we're moving in the right direction.
So that process can continue without a weakening of the labor market, basically, you're saying?
Well, I think the labor market I don't know if it's rebalancing. Clearly, there was a fairly severe imbalance between demand for workers and supply at the beginning of the pandemic. So we lost several million workers at the beginning of the pandemic from people dropping out of the labor force. And then when the economy reopened, you remember 2021, you had a severe labor shortage, and it was everywhere. Panic on the part of businesses, couldn't find people. So what's happened is we expected the labor market to come back quickly, and it didn't. And 2022 was a disappointing year. And, we were kind of thinking, well, maybe we won't get it back. And then 2023, we did, as you know. So labor force participation came back strongly in 23, and so did immigration. Immigration came to a halt during the pandemic. So those two forces have significantly lowered the temperature in the labor market to what is still a very strong labor market. It's still a good labor market for wages and for finding a job, but it's getting back into balance, and that's what we want to see. And one great way to look at that is what's happening with wage increases, and you see it now across the major things that we track. It isn't every quarter, but overall, there's a clear trend, still at high levels, but back down to what would be consistent with where we were before the pandemic and with 2% inflation.
Chris.
Hi, Chris Rugaber at Associated Press. Thank you. I wanted to follow up on Rich's question. It sounded like you suggested that you're not worried about faster growth so much. So wanted to see if you're seeing anything that suggests that inflation could reaccelerate from here. And it sounds like you're saying you're not worried that solid growth from here on out poses any risk to inflation. Thank you.
No, I think that is a risk. The risk that inflation would reaccelerate. I think the greater risk is that it would stabilize at a level meaningfully above 2%. That's to me more likely. Of course, if inflation were to surprise by moving back up, we would have to respond to that, and that would be a surprise at this point. But I have to tell you, that's why we keep our options open here, and why we're not rushing. So I think both of those are risks, but I think the more likely risk is the one that I mentioned, which is you've had 6 good months, very good months. But what's really going to shake out here? When we look back, what will we see? Will inflation have dipped and then come back up? Are the last 6 months flattered by factors that are one-off factors that won't repeat themselves? We don't think so. We don't. That's not what we think. But that's the question we are asking. We have to ask, and we want to get comfort on that.
And just one quick follow-up. Governor Waller had mentioned the revisions that are coming on February 9th for the CPI data. Is that something you're watching as well? And if we see those revisions fairly minor, is that going to give you more confidence?
All right, everybody. I think I've heard enough, right? Basically, we got exactly what we expected today. Nothing too crazy, nothing out of the ordinary. Some good news, some bad news. Let's watch the data. Let's see how it plays out. Basically, a nothing burger. And the market sold off a little bit. We expected to see volatility. We got volatility. Market sold off. It's being bought back up basically to, pre meeting levels, right? We could see it right here in the 4 hour. Exactly what we expected. Nothing crazy. Nothing crazy here. So we're going to keep tabs on it, of course. We'll be responding to this, reacting in it into some future videos. Eyes will be peeled, of course. But I think this really sets the stage for a nice rally in the price of crypto and Bitcoin. This isn't negative news, not bad news by any means, right? So I think we can continue to see, I think, a slow and steady move back up. Remember, if we zoom back out, January 11th was our big day. We almost got to 49,000, right? We had a little bit of a scare on the sell-off here, got down to 38,600. I think we continue to see Bitcoin build back up here over the next few months. We may see another drop before the halving. That has been said. We could see that, but at the end of the day, I'm going to continue to dollar cost average into Bitcoin. I'm not going all in, right? But dollar cost average. That's my strategy with Bitcoin always, and with crypto in general. I've been talking about accumulating a lot of my favorite alts right now. I am so fired up, guys, for this bull run. I mean, as big as 2021 was, we have so many more things happening right now leading up to this next run. We have so many more bullish things. 2021, we had the retail boom. We had people at home during the pandemic. This next bull run, now we have the biggest players in the world. We've got ETFs that are live, okay? We've got ETFs that are live, but we also have the halving, and we also have the legitimization of the press now as a market that has to be taken seriously. So we have so many things to be excited about, and I think the attention is going to shift to an Ethereum ETF, and that will bring all the altcoins back into the spotlight, right? So it is, I think it's a great time, man. It's just a great time to be here. I think we all should be super, super blessed. The world's changing. Everything is changing. The world is changing. The monetary system is changing. And if you're here on this stream, you're watching videos like this one and live streams, we're at the perfect time, at the perfect place to be ahead of the curve here. So I'm super pumped. I'm super ready. I can't wait to see what's in store for us here. Everybody's fired up. Love it. Make sure you guys subscribe and like the stream on your way out. Going to have a lot more content coming your way. Make sure you guys hit that subscribe button so you don't miss out on any videos. Ring the notification bell so you get notified when I put out some more content. I appreciate every single person out there that supports this channel. We're just a small channel in a big space, but we're growing every single day. We've been here for a little while now, 2+ years, going on 3. And we're going to continue to plug away, continue to learn, and continue to create our financial freedom. That is why we're here. First and foremost, that's why I'm here. I'm here to obviously help you and navigate this crypto space, and let's do it together. That's the point of all this, right? So appreciate you guys as always. I'm out. We'll see you.